So Aaron, we go way back.
Hi, Erwin.
How you doing?
Great. It's been a while, yeah? A long while.
I see you monthly.
That's right.
So for folks who don't know, Aaron Moore is part of the mastermind I belong to. You've been actually part of it longer than I have. But we knew each other even before that.
Yeah, through local real estate networks, we've been around for a while.
Right. How long? What year did you join REIN?
That was 2009 for me.
Oh, you're a year. Oh, wait. Oh, a year after. Okay. So you get your tenure next year.
Yeah, that's right.
Cool. So, as usual, Aaron is unprepared. No fault of his own. He doesn't have his questions in advance. So, Aaron, what's keeping you busy these days?
Well, lots of real estate stuff, of course, but I'm also a dad, so I've got a 3-year-old, and she definitely keeps me busy.
I bet. Is she part of the reason why you invest in real estate?
Well, I was doing it a long time before her, but I guess it was that future mindset, certainly to have lots of time with my family, kids, and yeah, I'd say the year after she was born, I kind of relaxed a bit on business and real estate, and really had a lot of time to spend with her before she got into her preschool, or what do they call it nowadays, her daycare. Mm-hmm. So yeah, I had definitely probably half a year I was just relaxing with her and doing very small amounts of work. So I'm able to do that if I want to.
Right. And how long were you investing before she was born?
Oh, I've been doing this full time since 2008. So many years. Yeah.
Well, actually, I don't even know the answer to this. What did you do before real estate?
Well, I worked in the tech world, the corporate tech world. I worked with IBM. They're a pretty big company. So yeah, I do have some background in software and, websites and all that sort of thing.
Got it. That explains a lot, because that's been a very big part of your strategy.
It is. It's a big part of my marketing, the web marketing. So it relates.
Cool. So what has real estate investing meant to your lifestyle?
Well, it's definitely given me a lot of flexibility. I like doing projects, growing a business, but I definitely have a lot of flexibility. I wake my daughter up every day, mostly. I'm there when she's going to bed a lot of the time, picking her up from school every day, and then she makes me play with her for a couple hours. So I'm able to do these kind of things. So, but I'm sure she won't want to do it for the rest of her life. So I've got a few years where she wants to spend time with me, and here I am.
Very cool. Very cool.
Yeah.
And what was life like when you were in the corporate world?
It was fresh out of university. I'm gung ho for a few years. You enjoy the challenge, doing new things. But definitely after a few years, the interest wanes. I was kind of working to rule. There was a few years I really, let's say I did slightly over the minimum, but I just wasn't into it anymore. I was looking for a way out. Right. So.
And then how'd you come across real estate? I'm sure you were looking at many options. Yeah,
I was exploring different things in my 20s. But I read the Rich Dad, Poor Dad books and other books, and I knew people who had done some real estate. And then I think when I was mid 20s, me and my brother, we both bought a house, but I just moved my housemates with me. I bought a house, moved my housemates with me that I was living with at the time. So I became a landlord that way. And my brother did the same thing. We did this like within 6 months of each other. And it turned out very well for us. That was the start.
So your housemates, you were guys all renting together, and then you basically bought them a house, and you had
and then they rented from me. Yeah, that's right.
They don't still rent from you, do they?
No.
Do you still own the house?
I sold that one. I had it for 6 years, but I sold that one.
Do you remember what you paid for it?
Yeah, I think I do. I think it was $245.
Whereabouts? Do you know
that was in the junction in Toronto, like Dundas and High Park area. Oh, Keele, High Park, Dundas. Right behind Vesuvio's Pizza.
What'd you sell it for?
Just over $5. I think it was $520.
Okay, so it went more than double then.
Yeah.
Sorry, you said 240 to 520?
Yeah, 245 to 520 is my memory, and I remember those numbers because it was like the first one.
Right. What do you think it's worth today?
Yeah.
Hyde Park stuff's worth is
Oh,
crazy.
this is the junction north of Hyde Park, but I haven't checked. I'm sure it's getting close to $1 million.
Any regrets?
I regret tons of houses I sold or wholesaled, but you can only handle so much any given year.
Right. Okay. So what's wholesaling for those who don't know?
Yeah. Well, it's pretty basic. It's a basic legal concept. You get a contract. It's really just assigning a contract. You get a contract. Usually it's a good deal on a property, a deal that someone else, like an investor, would want. Maybe they want it as a rental property or a flip. So it's something with potential to fix and flip. So I just assign the contract to someone else. They pay me a fee and they carry out the terms of the contract. Mm-hmm. So pretty much anyone who's ever bought a piece of property before, they could think to themselves, okay, I bought this piece of property. Closing is a couple months away. You know what? I don't feel like closing on it. Maybe someone else wants to close on it. So I'll ask around, ask a few people. You find someone else who wants to close on it. They pay you. Let's pretend it's $5,000, $10,000, whatever it is, and you sign the deal over to them.
Mm-hmm. Now, there's many people get into wholesaling as a full-time. They're trying to make a full-time gig of it. Versus you just actually have your plate full. And
yeah, I'm looking to ramp up the wholesaling side of my business as well right now. But the past few years I have been maybe marketing a little bit less, doing a lot more rehabs and buying rentals, doing more fix and flips myself, and just taking on marketing less, doing less deals. But now I've definitely spent some time ramping up the marketing. So I definitely got more deals than I can handle a lot of the time. So, there's times I'm busy, I'm going on vacation, I'm wholesaling, but right now I'm just looking to ramp up the wholesaling part of my business as well.
Very cool. Hey, Aaron, just give you a heads up. When you're touching the table, the mic picks it up.
Okay, got it.
Yeah, so for the listeners, they just hear boom and they have no idea what's going on.
Hands off.
No, like imagine if you're driving, you hear boom, like
yeah.
Did someone just bump me? Cool. And how long have you been doing this with the wholesaling?
Yeah, I went full time 2008. Been doing this since 2008.
That's how you started. Got it. Oh
yeah, I started. Well, I had rental properties back 2003 to 2004. Just that was our first couple properties, but that was very minor. Right. But then really got going in 2008.
Wow, 2003 is a great time to invest. Just coming right off the recession.
Yeah, definitely.
It's funny because I still hear stories of people who are like 2003. Like I'm waiting. I think the market has more to go down. I'm waiting. And then for those who didn't take action, like you paid $245 for a house that's worth almost $1 million now. Like the market wasn't low enough for you.
I should have held on.
Yeah. Well, and actually that's very common because very common question is, when do I sell?
Yeah.
Right. And the first thing I say, again, without knowing people's context, right? My first thing I say is, well, monopoly is won by holding properties.
Yeah, definitely.
Right. Of course, you have to trade. There are times where you need to trade to be more strategic, to own like your corner, to own like your entire color, so you can charge more rent. But for the most part, it's holding and making people pay rent.
Yeah.
I want my kids to play Monopoly. I'm sure you want your daughter to play Monopoly too.
Definitely. Yeah, it's a good game. I remember enjoying it as a kid, but now business in life does feel a bit like Monopoly. It's kind of fun. Business is fun for me.
Awesome. And so can you give our listeners some advice on how, like your web strategies, for example, or any strategy you want to share about on how folks can find deals, for example?
Sure. Yeah, I've done a ton of different marketing methods. I'd say I started with, the majority was like mailing flyers, letters, that sort of thing. That's an easy way to get started. You can target specific neighborhoods, specific types of houses you want. Now I do a ton on the internet. My website's been around for a while. I think my website went up in 2010. I think Google likes it by now. They seem to be giving me some respect. So I do well in the search engine optimization side. I come up naturally in the search engines, and I put some focus into that as well. I also do the pay-per-click. People mostly know the Google ads. So I've been doing that for many years. Mm-hmm. I think Google likes me on that side too, because it does well for me, this whole internet thing. With the internet, you can kind of cast a wide net, so I can advertise to big geographies pretty easily and quickly. So I'm buying, like right now I've got properties, Mississauga, like I'm talking some, just some flips I got going on right now, Mississauga, Oshawa, Scarborough, even got one up in Keswick, which isn't my normal range, but I took it on.
Sorry, I had to Google that. I don't know where Keswick is.
Yeah, when I got the phone call, I didn't know where it was either, but it's actually like, it's not far at all. It's like half an hour up the 404. It's at the end of the 404 on the lake.
Oh, okay.
It's just north of Newmarket, so it's not a big deal.
Not a big deal.
Yeah.
So for people like flips, for example, people who don't really have context, they just think everything sounds sexy. Wholesaling sounds sexy. Yeah. They don't really understand the challenges that go behind flips and one question that comes to mind is, so you mentioned your properties in like between Oshawa and Mississauga, they're opposite ends of town. Do you use the same reno crew, or you have crews in different cities?
No, yeah, I've got crews in different cities. I've done multiple projects with each contractor, working on different ones.
Yeah.
But yeah, they tend to stick to different areas. I got a guy who, I just keep him in Durham, and then I got a fellow he'll certainly do my Peel York work. So, and then I've got a lot of trades who will, definitely roofers, pavers, those guys for day jobs. Those are just day jobs, windows. They'll travel, all over the GTA for a decent job.
Right.
So I can send those guys all over.
Do you spend any time on the tools yourself?
Really, no. It's not my skill. I'm useless at it, so it's just a waste of everyone's time.
And who's general contracting? Are you hiring for that, or is that you?
It's usually someone else. There are some smaller projects I will general contract. Yeah.
And then, and just because I know through conversations with you, but like how many, say you get 100 phone calls or 100 internet inquiries, how many of them are actually worthy of following up? And then how many do you actually would want to convert?
I think it's roughly, for me, it might be 1 in 25 becomes a deal.
Yeah. Okay.
There's definitely others that put offers on, that are close to being a potential deal. And there's certainly a lot of sellers I give guidance to, like, I just give them the facts. Like, listen, you're better. This house, your situation, it's better suited with a realtor. Mm-hmm. Just, go that route. Mm-hmm. Some people I talk with, they bought in early 2017. I'm just thinking of one example I've talked with recently. They bought in early 2017. The prices have fallen since then. They've got 3 mortgages on the property. So it's really mortgage high. The payments are ridiculous. There's just nothing that can be done. You got to give that one back to the lenders. Like, that's a power of sale one. So
right.
It's beyond, there's nothing I can think of to help out on that one.
Right. So you're actually trying to help people.
Yeah, I try to give them some guidance, if they've taken the time. I appreciate every phone call, every contact I get. Right. I try to give them a little guidance on the phone, but I certainly, I'm not going out to look at every property or anything like that.
No, that's cool. That's I ask about how many leads you need to actually do a deal, because I think novices, they'll get like 3 calls and they think they got to close at least one of them.
No way. Yeah. And listen, a lot of people are just curious about the service. They want to know how it works. Yeah. People are just exploring options as well. So you're going to get all kinds of calls in all different situations. So.
And I know in the past you've gotten quite a few calls from already listed properties.
Yeah. Oh yeah. A ton of those. And there's a lot right now. The market's slower. So people, things are listed. They're not selling fast. One of the big things to fix that is drop your price. And a lot of people don't want to hear that, but that's one of the big tips. And, I think realtors should consult with me, because I know realtors have tough times getting their sellers, their listings, to drop their price. But, sometimes that's the way to do it. A lot of the time, that's like people are holding high price for too long. I think I should be a consultant, because after they call me, then they do drop their prices. It's like they need someone besides a realtor to tell them.
Yeah. No, it's many times someone needs to hear something twice.
Yeah,
from two different people, and then before they, like for example, a client of mine, and if he's listening, yeah, I'm talking about you. He's starting an Amazon business, and he wants to do it on .ca. He wants to sell it to Canadians. And like, why would you do that? It's the same effort to offer to the Americans for 10 times the market.
Sounds good.
So why wouldn't you go after the 10 times bigger market versus Canadians? Like, whatever. I don't know. You didn't have a good excuse, in my opinion. Yeah. And then he heard it from somebody else, and he'd say, okay, fine, I'll do it on .com.
Oh, okay, good idea.
That just makes sense to me.
Yeah, definitely.
Same effort, 10 times the market size. Like, why wouldn't? Even if you do double the business, didn't you just win?
Yeah. At least he took yours and someone else's advice, so he finally went with it. That's good.
Chris, you know I'm talking to you. What are some crazy offers people have had for you? Because I know, people have offered you property in like the 7-digit range.
Yeah, I remember this was early when I first started putting an offer on a house in Forest Hill, and it was
someone in Forest Hill was going belly needed was well, yeah,
I can't remember the exact, but divorce, and it was around the 2008 2009 time, so a lot of people were hurting at that time. That was the recession. That was a higher end one.
For folks who don't know, for folks who aren't from the GTA Ontario area, that is one of the most prestigious streets in Ontario.
Yeah,
and of all of Canada, really.
If I had the same deal today, I would have closed on it for sure. At the time, it was pretty big for me. Like, this was 10 years ago. Yeah. It was big for me then. So I gave an offer, but it was pretty low. So I don't know what they ended up doing with it.
Do you remember the price tag?
It was under $2 million. It was so now I'm sure it's way more than that. Like, it was still in the high ones is what they were looking for. Wow. I want to say 1.7 might be what they were looking for. Yeah. But
any idea? I know it's not your market, but any idea?
I'd probably say definitely over 3. I'm probably 4. I don't know.
Who knows? Like, maybe Drake bought it.
Yeah, I should get my assistant to look into some of these historical examples sometime just for fun.
That'd be hilarious. I don't know. I'm crazy that way, so I'd want closure. And also, just selfishly, since it's your labor that you're paying for, go find out what it's worth.
And there's tons of just weird situations. There's a lot of tough situations for sellers out there, and just people are in difficult life circumstances. Yeah. So, and houses can be a complete disaster, and there's people living in your house that you don't want living there. You want to get them out. So there's so many different situations.
And that last situation, is that tenants or is that like family?
I'm thinking of a couple. One I think that comes to mind was a tenant. Another was family, like an inherited house. Yeah. And I do remember them telling me, like, they were like, we don't care about the money. We just want the troll out of the house. And the troll is like the brother who's been living at the house for decades. And, he was raising chickens and guinea pigs in the house, in the backyard, and there was rats everywhere. The neighbors were so thankful that finally the rats, after we finished running, the rats were gone, and there wasn't rats in their yard all the time. And this was actually, I think he might have had a license to raise these things in town. Yeah. That's very strange. Yeah.
That's wild. So a question that comes up often is, what is the right price to pay for a property? Do you have some guidance around that?
For me, some people have these formulas, like say 70% of ARV, or after repair value, minus repairs. But, I'm more of a spreadsheet guy. I punch my numbers in a spreadsheet. There's so many variables. And also, okay, if you're buying to rent, you're buying to fix and flip, it's a totally different equation. And each person, you've got to have some sort of competitive edge especially if you're flipping properties. If you're a realtor, or like myself, you got to have a realtor in the family. Maybe you got to be good with the trades. Maybe you manage the projects. You got to have cheap money. So you got to have some sort of competitive advantage that plays into your numbers. If you're using the most expensive private money, you need to hire a realtor. You got an expensive contractor. good luck. You're not going to make any money, or your offers are going to be so low, you're never going to get an offer accepted.
Right.
So you need to have a competitive advantage to be able to, do a fix and flip.
Right.
So, really I'm punched into my spreadsheet, and, if I think I'm in a position where I can get bank financing, or I'm sitting on a bunch of cash or my lines of credits, there's a lot of availability, then, my offer is going to be better. If I've got a ton of deals I'm buying right now, then, my offer is probably going to be a bit lower than it was a few months ago. So a bit of it's situational, but for me, I'm really a spreadsheet guy. I'm punching in my numbers into my spreadsheet and seeing what I want to make and what I'm comfortable with.
Right. But that, for the novice's benefit, like you have quite a bit of experience, so you know what budgets will be for renovations, because renovation budgets never come in.
Yeah. And if I'm doing a big reno, like say an older house, new kitchens, new bathrooms or more, I need substantial profit for that. Like I'm not doing that for 10 or 20,000, because 10 or 20,000 can disappear pretty quick on a reno. So, I might do 20K for some like 10-year-old house or something, some kind of condo that barely needs any renos. So, you got to assess the project and the situation, and yeah,
it's not. And for folks listening, if you haven't done this before, it's not nearly as easy as Aaron leads it to be. Like, understand, Aaron's been doing this full time for more than a decade.
Yeah.
So.
I think about my first like major big rental project, and it was scary. Back then, it was like it was a totally different mindset, and it was totally different. Your first one, it was big. Like we actually saved the kitchen, but it was a legal basement apartment. It was grandfathered, which made it easier, but we made it legal. So the basement was a complete gut, and I think we were able to keep the kitchen cabinets in the kitchen upstairs, but I think a new bathroom, new flooring, because it was a stinky dog cat house, a hoarder kind of house, and it was a detached house. So there's also some landscaping, exterior work. So it was, it's a big reno.
That's pretty full blown.
Yeah. So.
And how was that experience like?
Well, it was good. I, had a good contract. He was a good guy, good contractor, which is fortunate. So I hired well, and he, in hindsight, he gave me a really low price at the time. So I got a deal on the renos. He ended up doing multiple projects with me, so we got, I think, better prices on later projects.
Right.
But we made a great profit on it, so that's the end result. Can't complain. But it took a lot of work, and it was much more scary back then.
Right.
Excuse me.
So, like you said, like 10, 20 grand can disappear very quickly. I actually know an investor that did a flip with only a $30,000 expectation for profit. And it was joint venture, so it's like 50-50.
Yeah.
and to give scale, 30 grand was about 10%. Would you do that deal?
If it was like a condo townhouse or something like that, sure, but probably not a detached house, or probably no freehold house, really.
No, because what I'm trying to get across to people is that you need to work in a lot more buffer. And what kind of range are you trading in now for property? Because what I want to get to is when people start looking at flips, for example, they're often just focused on what's cheap.
Yeah. I think I've only gone as high as 800s, but I bought a couple just in the past few months, 500s.
But that's like further east, like Oshawa.
That one was Mississauga. Like it's only going to be worth like high 600s after renos, but it needs a lot of renos.
Mm-hmm.
Like it needs roof, windows, furnace, AC, driveway, and kitchen, bath. The whole thing. Right. So it needs a lot of renos. Right. And further east, Oshawa, I'm still buying stuff in the 300s, like just under 400 in Oshawa. Yeah.
Got it. And then what percentage of the deals you're doing do you think people cannot get bank financing on?
Probably at least 50%.
Yeah, cool.
Yeah, because if it has a kitchen, bathroom, and flooring, you're pretty good. Like some of these houses are just old and dated, covered in nicotine stains. And they might smell, but still, the bank's okay with that.
All right.
If it's like this one in Mississauga I just bought, you got the kitchen. It has a kitchen, but it's leaking. It's been leaking for years. It's just a disaster. So everything below is wet and rotted.
Yeah.
So they probably wouldn't finance that.
And then how do you close the deal then?
I use a lot of private lenders on these properties. And, nowadays I've got my own personal contacts who do private lending for me. So,
right.
Occasionally I'll still use brokers, but typically it's people I know. And they just lend to me on projects. And they're usually short term, like under 6 months. So it's a nice short-term investment for people to earn a high return.
Cool. Are you able to share what you offer for private money?
Yeah, it's usually a bit better than 8%, I say, because it's typically I pay 1% upfront and then 7% annualized.
And if anyone's interested, how can they reach you?
Probably my website. It's got my contact form and phone number as well. You can reach me. It's housedealsgta.ca. That's my site aimed for investors. Whether people are looking for wholesale properties or to lend private money on some of my flips, they can contact me through that website.
Excellent. And folks, if you're listening, driving, running, whatever, I'll have all the links for Aaron in the show notes at truthaboutrealestateinvesting.ca.
Thank you, Erwin.
Well, I don't want people driving and trying to write this down or asking Siri to make a note, nothing like that. So everyone, keep your hands on the wheel. Yeah. Aaron's not going anywhere. It's
no.
Okay. No, because what I was trying to get across to folks is if you don't have access to private money and you don't have deep pockets, then all of these opportunities aren't available to you. And that's partly why that's why sellers need to go to people like you who can close deals.
Yeah.
Versus, almost every client that we work with is getting bank financing. Yeah. Who doesn't want to get cheap bank? Everyone wants cheap.
Of course, we all want it, and if I can get it on a property, I want to get it too. But some properties is just the banks aren't going to lend on it because they're a disaster. Or sometimes, a lot of the sellers we work with. Not a lot, but some definitely want fast closings. I'm talking like a week or two, and good luck trying to get a bank to lend that fast. It's not going to happen.
And what's the reason why? What's the reason why they need it that fast?
Sometimes it's people just leaving the country. Sometimes often it's the sheriff coming to lock them out, and it's a foreclosure situation. Sometimes people are just so overwhelmed, depressed, stressed out by their life situation. They just want out of the house. The house is like crumbling around them. It's a mess, a disaster. Right. It's not been maintained. They just want out, and just get them out as fast as you can get them out.
And then how's that working with the lender in those cases where they're foreclosing?
Yeah. Well, I've bought houses after people have been locked out.
That's pretty far in the process.
Yeah. I've done different things. I remember when I saw it before they were locked out. They didn't even tell me, they don't always tell you everything. And then the house, and a few days later they're locked out, and I have no more access to it, which is fine. I've already seen it. I'm fine with everything. And then after I close on it, I let them back in. I'm thinking this example. I'm thinking of of course they don't have much money, so I got them a moving truck and helped them with things to move their stuff out after I bought it to get access to the house. So there's all kinds of things, and sometimes I also I do look at these situations and I try to help people. I give them options and I try to do what's best for them. Mm-hmm. I give them an option. Like, listen, I'll buy your house at this price. But hey, if you want to renovate it yourself, I can give you a loan. You can take your time. You can renovate, sell on the market to a homeowner, and keep more of your equity. So I've had people, take my loan option sometimes. And one of those examples, they called me a few days before they were about to get locked out by the sheriff. and we couldn't process the loan to them. Like, this is a second mortgage that I'm giving them, so the lawyer can't get everything done fast enough and get all the information on their liens and everything on their title. Anyways, but they were out of the house a few days, but we got them back in a few days. We gave them a loan to cover all the money owing, and then they did, they took their time. Well, a couple months. I don't want them taking too much time. A couple months. They renovated it, made it nicer, sold it on the market with my lovely realtor wife, of course, because we give them a family bundle package for multiple products. Mm-hmm. And yeah, then like those people are really thankful as well, So we allowed them to keep a lot more equity in their pocket. We gave them multiple options, and they were, so thankful for that option.
Super cool. So someone the other day, I forget who it was, someone the other day called you the Canadian investor.
What? Did they?
Yeah. It's just like, because investors often get a bad name. And we were talking about this offline earlier. Yeah. Like I have a friend of mine who goes to events, not my events, but he goes to, well, actually he stopped going to events because he thinks 50% of investors will step on his grandmother to make $1. Right? Yeah. Versus here, you're trying to literally help people. Like when you have them, and they're on the ropes. Right, and you're helping get them off the ropes.
I try. I'll admit sometimes I'm a sensitive, emotional guy, and I talk with these sellers. I do I'm not going to call it crying, but I get teary eyed talking with these sellers sometimes. Sitting on their couch or at their kitchen table, and it's tough out there sometimes. So
yeah, it's tough out there. Yeah, and I and you're willing to invest money in them. That's tough because they're usually often in these situations because they're not good with money, and you're willing to invest in them.
Well, I'll invest. I'll loan to these people, but of course, I need equity in the house. So I'm a business as well, but if there's equity in the house, I'll loan to you. That's pretty much how it works.
How about situations where the first is, so like say there's 3 mortgages. Yeah. Say it's like 95% loan to value or whatever. Yeah. You can't. Yeah. That's not some situation you can get into.
Probably if there's 3 mortgages, no. If like 3 private mortgages, but I have done deals where it's probably 95-ish, close to 100% loan to value because. Years ago, I think it was before 2008, people could buy with 100% mortgages. So I think I did a deal in 2011. So I did a deal where I took over their existing mortgage because they couldn't sell it for the life of them. Mm-hmm. I did a couple properties like this. They couldn't sell it for the life of them on MLS with a realtor because with the realtor fee, the mortgage payout penalty, they'd be negative. Mm-hmm. So I took over the mortgage and I put in a rent-to-own tenant, and it would all worked out well. So there are situations when I can work out something, even if they are close, like 90 to 100% loan to value. Right. But it is few and far between.
Pretty cool.
Yeah.
I'm impressed because I know many people can't do what you're talking about with pulling multiple strategies. Yeah. Because for example, how many people do you know can pull off an RTO or even know what a rent to own is, and you're able to put that together. Yeah. And now the other question I have is because I want listeners to know how many of those deals that you're doing are 10 to 20,000 only. Because we get questions all the time for people for turnkey property, and it's nothing. It's human. I think it's normal for people to ask for the moon, right? Yeah. I want a wholesale turnkey property that needs like 5 to 20 grand only.
Yeah. Sorry, are you asking whether people can buy properties putting in 5 to 20 grand, or
now, how many deals do you do? Say you're doing 10 deals.
Where I make 5 to 20.
That you only need to put in 5 to 20 grand.
Oh, for like a reno? Yeah. Very few. Right. But I've had some. Right. But it is very few. Right. It's probably more of a condo type property.
Right. And I just want people to have the expectations of what they're looking for. Because again, like I said, we ask these questions of people, of investors, for example, who want to work with us. and they say, okay, I want a multifamily. Okay, great. What kind of tenant profile do you want? Well, he actually says, like, I've been always taught to, reach for the sky. So I want all doctors and lawyers.
Okay.
Oh, you want an all doctor and lawyer apartment building in Hamilton, eh?
That's difficult.
Let's go find us a unicorn while we're at it.
Yeah.
and it has to be a 10 cap. Like, oh yeah, because because no one's gonna pay you for that, eh?
Maybe there's a student house with future doctors in it. I don't know. I went to school in Hamilton, by the way. I went to McMaster, and I spent some time in student housing in Hamilton.
Yeah, it's not the same thing.
Yeah.
It's not a 10 cap multi.
I know.
So again, I don't want people having the wrong impression of the style of investment that you do, that turnkey properties fall in your lap.
No, almost like I've got rentals, and I can't think of one that I bought without substantial rentals. Right. And probably I used to do more of this. We'd buy, do the what they call BRRR or something, but we bought, reno and rent and refi. I did lots of those. They're harder to find close to me nowadays. Like it seems like I got to drive further and further to find those deals.
Right.
But most of my rental properties were that strategy.
Right. I think it's BFR or whatever it is.
Yeah.
It's funny because even when I started investing with like no education, it just made sense. Like buy for cash.
Of course.
Because back in the day, things were cheap. You could buy for cash, or just use the home equity line to pay to pay at 100% of the property price with your HELOC. Do your renovations again, finance with the HELOC, and then go get a mortgage.
Yeah,
and then rent it out.
Certainly, Yep. Or if the property is decent, there's some banks that give you a bank mortgage, and then you just blend it or top it up after renos, and so that's lots of ways to get her done. But it seems to be harder these days. Maybe it's the 2018 mortgage rules and house prices going up, so it's just getting more difficult.
Like you were just talking about, like you're paying like between $300,000 and $800,000 for properties. Like, not many people. It's actually hard to get that on the home line, that much money.
Oh, yeah.
Yeah. Say it's like your third property. How much home line do you have left?
Exactly.
Yeah. Awesome. Yeah, so it actually sounds like you earn a lot of your money. This isn't easy money.
I work a lot. I enjoy it too, But yeah, there's definitely a lot of projects and a lot of work involved. It's for me, it's building a business,
Right. So, and again, I want people to understand that like nothing's easy in this. I don't say nothing's easy because I think what we do is not really hard, right? It's just you put in the time and you get the results.
It's definitely the time and money are leveraged. There's definitely a leverage there with real estate. So it's worth putting in the time.
Yeah, because I was interviewing James Maggs, and people have likely listened to that episode before this one, but just to share with you, like just think about how much time. So actually, no, like think about your rentals, right? Because you keep some of them, you hold some of your properties, rent them out. Like think about how many hours you put in a week to own them, to operate them, and then think about how much wealth they've created for you. Yeah.
Yeah, it's ridiculous, the wealth in the GTA, like the wealth creation since 2014, how much properties have gone up. So anyone who's owned since 2014, count your blessings, because it seems like house prices have gone up so much all around the area.
Now, you and I worked jobs before we were doing real estate. Think about how many hours we put in to earn our salaries.
Yeah.
Compared to how many hours we put in to owning real estate. And the returns, right?
Yeah. There's no comparison for me. There's no going back.
and just to be clear for everyone, like you've made a couple million, right?
Yeah. It's in the millions by now, over 10 years, certainly.
It's actually, I see it a lot in social media advertising, actually. I'll advertise, probably. Let's call it because I don't have TV anymore, so that's the only advertising I see.
Well, congratulations to you.
We'll call it social media advertising. But people talking about like building 7-figure businesses, right?
Yeah.
And then like almost everyone every guest I've had on this show has a 7-figure real estate business.
Yeah.
Right?
Yeah.
And I mean excluding your principal residence too. Like everyone on the show has built a 7-figure portfolio, not the value of what they've owned, the increase in net worth that they've gotten.
Yeah, yeah. Like I said, if you owned anything, 2014 before, man, you did well.
If you just held that one house, another 2 years probably you would have made your million. Right, one house.
That's right.
Right, that's crazy.
Yeah. Yeah.
So yeah, it's funny because like you've been around a long time. Like just at REIN, you've seen. So Aaron and I were both part of Real Estate Investment Network. People spend it's $200 a month there plus tax to be there every month, and then not even everyone in the room owns real estate. And then outside that room, what percentage of people own real estate?
Yeah.
And again, it almost seems like madness to exchange your time for like 40, 50, 60, 80 grand a year when we're putting in 2-3 hours a week to own.
If only I knew now if only I knew in my 20s what I know now, right?
Right.
But here we are now, and it's good.
Did you get any lessons from your parents?
Lessons from my parents? Definitely not on investing, but they definitely taught me to live within my means. Maybe to put things in perspective, I basically bought my parents their first house, maybe 5 years ago. So big goal for me anyways. So that was a big accomplishment.
That's pretty awesome.
Yeah.
Brendan Burchard shared how part of the definition of success is when your accomplishments can allow you to give back to your family. That's pretty nuts. So
it's great. It's done great things for the family. Like my brother, he's and my father now too. They have some rental properties with me. My brother does some flipping on his own. The whole family, everything's come up thanks to real estate.
Pretty cool.
So. Yeah.
So for listeners, like I get this all the time for people who are like 65, 75, 85, and they go, "Oh, it's too late for me." Well, teach this to your kids, and then especially for those folks who are like in their 40s and who say it's too late for me, like go teach this to your kids. Maybe you'll raise an Aaron more, and they'll buy you a house. So send us this podcast.
I must say I'm a pretty good retirement plan for my parents. So.
And to me, that's like living the dream. Is when you can give back. Because
definitely,
like my own family, like they did all the heavy lifting for me, right? And then especially the previous generation, they did all the heavy lifting.
Well, to put my parents in perspective, they did it. Of course, they sacrificed for me. They put tons into me. They sacrificed for themselves. They live very modest lives and sacrificed for us kids. Mm-hmm. And I got to thank the government of Ontario and Canada. I went to university on government money. They forgave me my loans. Maybe half my loans. I paid them. I was paying them back for probably a decade. But it was no big deal. I could have paid them back earlier. But what's the point? It's low interest money, I thought.
Yeah.
But my parents did great. They weren't into financial stuff. It's funny. Like I read some of these news articles about the poverty line, and so many Canadians are living in poverty. You look at the income numbers, and when I look at the income numbers, as an adult, I said, I might have been living in poverty some years growing up. I didn't realize that. Just my family had a fairly low income, but we did okay because we kept expenses low and had low rent and yada yada. But it just, for me, it puts this poverty line thing in perspective, because you can do just fine living under the poverty line. Right. You can't live the expensive life though.
Right.
I don't know.
Well, we kind of can now. Like, for example, I take my mom on a cruise with us every year.
Yeah.
And she...
Yeah.
To give context to that, when I started cruising, is interior cabin. So, like, the cheapest you can do, right? When my mom travels, she gets a balcony. So she gets not the exact opposite, but a balcony that costs considerably more than an interior room.
Yeah.
What was your parents' reaction like with when they got their house?
Well, I've been doing real estate for a while. Oh, they're very thankful. They're always very thankful, impressed, and they think the house is great. They love it. So, and I've, the first house I bought. So my dad's been involved for me. So that first house I bought in the Junction, I think it was whatever my mortgage was. Like, I bought with 5% down. Let's say the mortgage was $230. I could only qualify at that time for, say, $210. So I needed my dad to sign on to get me over like that extra $20,000. So, I gave him some, when I sold that, I gave him some, a chunk of change. So he's had some chunks of change over the years, from real estate. So it's definitely appreciated.
Mm-hmm. Interesting. Yeah. So I think the lesson there is have kids, have them listen to this podcast, and then retire on that.
I think that's a great idea.
Excuse the self-promotion. I'm just being silly. Where did you? Do they live near you now?
They're not close to me now. I'm in Toronto, Don Mills area. They're out in Oshawa. Yeah. But it's not too far, I get over there a couple times a month.
Oh, you're there all the time for business anyway.
Exactly. Yeah, I've got lots of rentals there, so I got reasons to go.
Cool. And now, what are you working on? What are you working on now? Because I know you've been building up more educational stuff as well. Yeah, well, I this year I ramped up my internet presence more, getting into social media. The social media is probably more aimed at what I've been doing so far is more aimed at the house sellers, just getting some content out for house sellers. More stuff for them to find and when they search the internet, and more resources for them to learn some, making some more videos and putting out more content. But yeah, this year I've definitely got a focus on expanding my marketing. I'm looking to hire more. I'm looking to hire a salesperson just to help me, handle all the leads coming in, like the sellers who are calling me, go out, see more houses on my behalf. Like, for example, my assistants, while we're on this call, my assistant's going out to see a house while we're on this call and take some pictures for me, and then I'll give them an offer. So looking to build the team so I can, do more with a bit less of my time. Very cool. Yeah. It's funny you say that because I know so many people who cannot buy a house without looking at it. Yeah. Because I actually talk a lot to people who because myself included, you need to get off the spreadsheet to go buy the house. Right. Here you are. Right. I didn't go to see the house. You just jump in the spreadsheet and then you buy the house. Although, I'd buy it with I would see it. I'd buy it with a home inspection condition. I'd go see it. Right. Very cool. But I don't. Yeah, I don't need to see it before making an offer. I can have someone else do that. Right. Yeah. So is it far for you? It's not. It's Mississauga. It's far enough for me, especially. Driving at 4 p.m. It's not the drive I want to make. Yeah. So let your assistant do it. Very good. She lives further west than I do, so she lives closer, so it's better for her. Excellent. Yeah. So I mentioned earlier, we're part of the same mastermind. Can you share what is it meant to? What are the benefits been to you to be part of a small? I'm trying to look for another word for mastermind. Let's just call it mastermind. 7 people? Is this 7 of us? I think it's 8. It's 8 of us. But it's 8 of us. Counting. But there's an ongoing benefit to having experienced people who you can ask, answer questions, just share what's going on and any challenges. But further to that, there's a certain something about challenging yourself, setting goals, telling your goals to other people. And, it's like a challenge, a bit of a competition. Even just saying goals to the group makes me want to go out and do, it's more fire to my butt to go do it. And it also gets me thinking more about bigger goals. It does help me think bigger.
think about, more of what I can do. Probably because I'm thinking about hiring and expanding. That's really something, from the masterminding and coaching that I do. Like, that thinking, I'd be quite fine and comfortable keeping a small business and, just being self-employed with an assistant.
Mm-hmm.
But there's so much opportunity out there. I know I can do so much more. So let's do it.
Especially in Hamilton.
Yeah, that's right.
I heard it's a good place.
I haven't started marketing in Hamilton yet, but you never know. Maybe I'll expand.
Yeah. No, if you ever want to chat about if you need boots on ground, we can chat about that.
For sure.
I know you don't want to make that drive.
No. Yeah.
Very
but
cool.
I've got the head for expanding right now, so we'll see.
I have goals of expanding lots. I think you should expand too.
All right, let's do it.
How long have you been part of the mastermind?
Oh, I'm thinking 4 or 5 years now. That's off the top of my head, so it's not accurate, but
right. And then, what do you think is the reason why it's held together? Because most don't.
Yeah,
many do not. Life gets in the way. Someone drops off, and then things fall apart.
Probably because we're all, fairly we do a lot of action. We're action takers. Some years we'll do less than others. Like, it's just the ebb and flow of our lives. But yeah, we're all active, learning from each other. So might as well, and the relationships build. So I think we enjoy helping each other over time.
Mm-hmm.
So part of it's, the relationships keep you together.
Mm-hmm. Mm-hmm.
But if everyone's benefiting from it, then keep at it.
Mm-hmm. Even the people who've left are still killing out there.
Oh yeah, yeah. The people who leave usually go on to to maybe a more specialized group or more focused group, or something more in line with their business or where they want to take their business. So yeah.
Yeah, and because with our mastermind group, we're largely real estate focused, and there are some branches away, like around marketing and around short-term rentals and stuff like that.
Commercial real estate. I know one person left to focus on commercial real estate and go to a commercial real estate mastermind. So
right. And then, for example, if someone wants to just go down the road of SEO and digital marketing, then we're not really quite the group for that.
Yeah. So there's so many places to learn from, but masterminds are a good one.
And what is it that you guys are looking for? Like, what do you look for to take on a new member? Because I know. Whenever I talk mastermind on the podcast or whenever I'm speaking about it, then people always ask to join.
Right. Okay. Yeah. Last I checked, I think we're content and full. So. I don't think they are taking anyone right now,
right.
And it's a group decision. So, but last I heard they're full and at their limits. But I guess you can always apply, and when we are looking for someone, they'll certainly take someone else on.
Right.
But certainly a certain level of experience, just someone active in real estate and fairly experienced. That's probably what we're looking for now.
Right. And
each person in the group might have a different answer of what they'd like that person to be like, or what expertise they want that person to have. But right. I think we all have a vote.
Yeah, because we're often looking for someone that fills a gap for us.
Yeah.
Right. And just to share for the listeners who are trying to form their own, because I think everyone should be part of one. We structure ours with everyone gets 15 minutes to speak about what they're up to, what they've accomplished, what do they plan on doing, and ask for help. And yeah, that's all you get 15 minutes to do that. And we set aside basically almost a whole day. We meet from 10 to 3 on a weekday. So that I know that'll be challenging for many of you, but figure it out, because no one else is going to do this for you. And I think we've done well because we've found a good group. So I'll give an example of Stefan Arnio. He shared on his podcast how he basically has to fly everywhere to meet people.
Yeah.
Because the community where he lives is not strong enough. like we all complain because we all usually meet in Brampton, right? You fight through traffic from downtown Don Mills, and we have people coming from Barrie, from Cambridge, and from wherever Sarah's from.
Coburg.
Coburg, right?
Yeah.
But because the value is there.
Yeah.
Right. So for anyone putting together a mastermind group, look for a group that will give value. Right. Don't just put together a bunch of your friends, and then you end up drinking and watching hockey. Yeah. That's not what we do.
And it could just start with probably even 2, 3, but you probably want to grow it more than that. But just start with a few people, and then seek more.
Yeah, especially people who are committed. People who are committed to themselves and to getting better, and people who have value to give, so experience to give. So like, I don't think anyone will doubt Aaron's ability to have knowledge.
Thank you.
Do you doubt it? Only on this podcast do we every day have people that made millions of dollars in real estate. So you go try to find someone on the street like that.
Yeah, it's a good place to be, I guess.
All right. Aaron, we're running out of time. Thank you very much for doing this. Can you share how would you like people to follow up with you?
Well, you can definitely contact me through my website, housedealsgta.ca. If you want to learn more about, people like to learn about the wholesaling, flipping side of real estate, you can look at my other website, gtahousebuyers.ca. There is real estate content on that as well, but it's more aimed at the house sellers. But investors like to look at it just to get ideas.
Right. And then no social media?
I'm not huge into it, but I'm on there a little bit.
But we're not sharing. That's totally okay. I spend way too much time looking at this stuff.
Yeah.
Aaron, any final thoughts for anyone who's trying to get off the fence? Thinking about buying their first property or their 10th property?
Well, just I guess if it's either one of those, just think about your next property and talk with people. Like, if you're not sure how you're going to buy your next property, then just talk with other more experienced people, I guess. Or yeah, definitely you want more experienced people, someone who's maybe a bit ahead of you, and just strategize. How am I going to buy my next property? Mm-hmm. You don't need to buy 5 in the next month. Just buy 1.
Right. And just for anyone who's having trouble getting credit comes up every time we meet.
Yeah, it's tougher in 2018, but it's still there.
And if you have credit, you are going to win in this market. Aaron, thank you again for doing this.
Thanks for having me, Erwin. Appreciate it.